All right, more earnings. Tesla tops estimates for quarter, but wraps up first annual revenue drop on record. Now, Tesla reported better than expected earnings and revenue for the fourth quarter. Revenue fell, however, for the third time in 3 quarters, and sales for the full year declined as well for the first time on record. Now, net income plunged 61% from a year ago in the quarter, as operating expenses jumped 39%. So it's mostly about expenses here that brought the net income down. And Tesla is up right now about 3% pre market, after hours actually, and we'll see what will happen obviously tomorrow. Now, they reported better than expected, however, fourth quarter results after the bell. And revenue still dropped, but the stock rose. Again, it always depends on what the analysts expect. So, analysts could actually expect a drop. And if a drop happens that is less than the expected one, then its results perceived as positive. Now, earnings per share at 50 cents, but adjusted versus 45 cents estimated. Now, adjusted, generally speaking, means that they exclude some expenses. And I have talked about it in previous videos in detail, what this means. You can find them in my channel. But it's sort of like a non-GAAP adjustment that excludes some expenses so that for the most part makes it a little bit easier for shareholders to understand the structure of earnings, or frankly make it a little bit of a better number, to be sincere. Now, 24.9 billion versus 24.79, pretty close here. But auto sales have been sluggish, so they haven't been great here for Tesla, as the company faces an onslaught of competition in various parts of the world. Revenue in the fourth quarter slipped, and full year revenue fell as well to 94.8 versus almost 98. So that's a pretty steep decline here, more than expected, and a 16% plunge in vehicle deliveries for the fourth quarter, and 8.6 decline for the full year. That's numbers that I don't like to see, frankly, if I'm a shareholder here, as we're getting even more news right now in CNBC. So the core business has been struggling. However, Musk has tried to focus investor attention elsewhere, and this is the Robotaxi, for instance, the ride-hailing app. The company has been running a pilot service here, and they plan to have coverage in 7 US markets here. So this is basically all about the AI. All companies are trying to harvest it, but the results that I'm seeing here in terms of the core offerings of Tesla are not that great here. Net income in the quarter plunged 61%. Again, it's about the operating expenses that we mentioned earlier. And you can kind of see it here, what has been going on. We have a little bit of a sluggish behavior here lately, after some time that it was going well. This is not necessarily a big problem, but kind of gives you a little bit of a sense of what is going on in the market for Tesla. And revenue in the energy generation and storage business increased 25%. That's nice to see. And they entered into an agreement to invest about $2 billion in artificial intelligence startup XAI. Very interesting too. This guy doesn't stop making startups here, it looks like. Capital expenditures fell 14% in the period. Capital expenditures, yeah, I kind of expected that there will be a significant topic on the earnings call as investors wait to hear about the chip technology. Because, every company and their mothers pretty much want to have some say on chips. As I mentioned earlier in previous videos, like Microsoft, Google, Meta, Amazon, all of these are taking some risk and potentially making their own products, their own chips, even with Google being in front of the race, ahead of the race right now when compared to the rest, where Google is actually doing really well on a hardware level. And Microsoft, also Amazon and Microsoft too, actually also designed some chips and stuff. I've talked about it in a previous video that I made in the channel like a few days ago. You can find it there's a ton of detail. I'm examining all this, it's super interesting. But what we'll do next is take a look at what has been going on with Tesla, which in the past year hasn't been doing greatly. It's almost going sidelines, close to what the S&P 500 index fund does. Although obviously in the previous year, if you take it a little bit more, it's going to be much more. But the stock is obviously expensive. We know that. It's a pretty expensive stock, with outstanding shares going up, because that's what companies do when the stock is expensive. They don't buy back. They actually sell more because it's expensive. And so it makes sense, right? Usually companies buy back their own share doesn't only mean that it's good for shareholders, it means that they are buying it because it's usually cheap if they are doing it in a clever manner, right? That's not necessarily true, but if they do it in a clever manner, it tends to be true. And still, revenue is going up, even though kind of sideways. We kind of saw that already. They are suffering a little bit here, with a net income seemingly lower, not that much. But remember, this is like a difference between the first year. So if you see the whole curve here has been going up and down quite a lot from what it used to be. And again, this has to do with a lot of things, like the operating expenses that we saw earlier. And total equity is going up, free cash flow is going up, kinda. So yeah, kind of expected, with margins suffering quite significantly. So again, kind of understandable with all the expenses that they have, and the returns have been sluggish too. Kind of seemingly looking like typical car company territory, like if you look at Ford, sort of these kinds of numbers here, which is not amazing to see. On the other hand, it's almost like a car technology company. It's a little bit of a complex situation for Tesla, and it's also a favorite of a lot of investors. So, that helps in the markets because it brings the company higher. Usually for me, these kinds of companies are not really a buy, but still, a lot of people are interested. I find them to be a little bit, I'd say, risky for my appetite. But you will see that what has been going on in the previous quarter, that is, things that we kind of already knew, like Tesla's energy business is a bright spot. The thing that we talked about also continuing in this quarter. Nice to see. And the other stuff is like factory shutdowns, then the bottom line. So yeah, pretty much the CEO Mega Awards is the other thing that we saw. It's a very, very well-known piece of the news here, how large and immediate the dilution risk from the CEO interim award. A lot of shares here. That's what these companies do these days. There's a ton of shares being given away in executives and even employees, but executives obviously get the vast majority. All right, so that's interesting to see for the company. And we could also take a look at the key stories quickly. Yeah, the CEO's massive payday is what was happening, some legal stuff. Usually this tends to be noise because these kinds of numbers, like a few million, it's not something to really worry about, but it's worthwhile knowing. And in some situations, it can be even more important. The factory pauses and obviously the robotaxis that we talked about and the energy deals being a potentially big thing here for Tesla. That's definitely worth taking a look at. Pretty important news here, and lots of cash. They do have liquidity. Nice to see, because a company that has the liquidity, even if they don't do that well for a while, they have their ways around it potentially. And yeah, we could obviously take a look at the stock evaluator, but you are not going to like what you see, because obviously the company's PE and especially the price to free cash flow is humongous, and even though they still have moderate capital intensity. But I expect, if I run it, to see a number that is really low. Understandably so, because yeah, you would expect that, because the company's stock price compared to the free cash flows is extremely elevated, obviously. With moderate capital intensity, I would say you always add a premium if you see that, because it means that the company is spending a lot of money in capital expenditures, hence they don't have that many free cash flows going back to shareholders. So you always take into account this fact, and so you could conceptually consider adding some premium to that if you're taking this high growth optimistic sort of like scenario here. But remember, we don't only check the cash flows of the company; we check other things as well. A lot of things matter. Margins matter, the debt matters, how much money a company has matters, how they are spending their R&D, capital expenditures, investments for the future. It's obviously a deep subject, and this is why the tool has a ton of stuff that we can analyze, including like stock alerts that shows us different things, different facts about the company with charts, so you can kind of see the exact history, the exact story of what is going on with the company, what is the decline. This is pretty fantastic data here that the tool gives us. And you can visit stockaiinsights.com and see all that. There's a free account too. I'd love to see you there and tell me what you think in comments. But yeah, that's what's going on so far with the company. For me, it would have to drop a lot to buy Tesla, and even then I would think about it, because what I don't really like about companies of that sort, it's a big thing with me. I'm not a big fan of margins. I want to see significantly more margins for a company, and especially when it's like so expensive. It's just not my thing. I find it to be pretty risky. But I still make, I would make this video and analyze it because there's still some potential for the company if it diverses a bit and invests in other things like the robotaxi and energy could make this much better. And so I would be much more interested if that happens. If they go towards that trajectory, things change for sure. But thank you for watching. Please leave a like. That helps a ton. If you like the video, please leave a like. And I'll see you in the next one. I don't know if there's more endings. I have to check. I've already done 3 videos, but it's a busy day. Yeah, thank you for watching. Bye.